If you're a business owner paying for your dentist, your glasses, or your physiotherapy out of your own pocket, you're probably losing thousands of dollars of tax savings every single year. There's one account that almost nobody knows about and every incorporated business owner should consider. In the next few minutes, you'll understand what the health spending account is and why it's different from regular group benefits. I'll walk you through on how the government essentially subsidizes 40 to 50% of your health expenses when you structure them correctly. I'll also walk you through a case study of a Winnipeg dentist who was spending $8,000 a year on family dental and vision, all with after-tax dollars, until she set up a health spending account and suddenly the corporation was paying those costs and saving her family $3,000 every single year. My name is Gwyneth Chambers. I'm a financial planner and portfolio manager. I work with Canadian business owners, incorporated professionals, and affluent families. And over the last decade, one thing to me is clear. Canadians are leaving serious money on the table, and on this channel, I show you where to look. Here's the reality. Let's say you're running a business or you're an incorporated professional. Maybe you're paying yourself salary, dividends, or a combination of the two. And at the end of the month, you need to take your family to the dentist. The bill is $1,200. You pull out the personal credit card and pay it. You get new glasses, another $300 out of pocket, your spouse does physio for a shoulder injury, $800 a month. What's important to remember is that you've already paid personal income tax on all of that money. You paid maybe 40 to 50% in tax to get that cash into your pocket. Meanwhile, your corporation has money sitting in it. That money can be used for these exact same health expenses, but you're not using it. Here's the trap. Most business owners think health expenses are personal expenses. They assume that they have to be paid personally, so they take them out all out of their personal after-tax cash flow. The reason most business owners don't use this strategy is because they've never heard of it. If you're like most small business owners, you never had access to traditional group health benefits. Those are usually available to owners of larger sized companies with dozens of employees, so you assume there's nothing available to you, and that's wrong. As an incorporated business owner or professional, you can set up something called a health spending account or HSA. The mechanics are simple. Your corporation sets up the plan documents. The plan allows your corporation to reimburse you and your family for eligible medical, dental, and vision expenses. The corporation deducts these expenses as a business expense and you receive the reimbursement tax-free. So let me show you the tax math just to make this a little more simple. Say you need $8,000 a year in dental, vision care for your family. You have two options. Option one is what most people do. Your corporation will pay you salary or dividend, and then you pay personal income tax on that money at your marginal rate. Let's just say for the sake of example, it's 45%. So you keep $4,400 after tax, and you use that to pay for your $8,000 health expense. The problem here I think is pretty obvious. You can't pay $8,000 with $4,400. So you're short. So either you have to withdraw more to make up the difference, or you withdraw money from your savings. Then we have option number two. Your corporation sets up a health spending account. Your corporation sets aside $8,000 for health expenses. This money is deducted by your corporation as a business expense. Your corporation's taxable income is reduced by $8,000. Depending on the marginal tax rate, the corporation saves maybe $2,400. You receive the $8,000 as a reimbursement of your eligible medical expenses, and that reimbursement is completely tax-free to you. You get the full $8,000 to cover your health expenses, and your corporation saves $2,400 in tax. From your corporation's net perspective, the cost to your corporation is $8,000 minus the $2,400 in tax savings, so the net cost is $5,600 to fund $8,000 in health benefits. That difference is essentially a tax subsidy. The government is subsidizing $2,400 or roughly 30% of your health cost. Now let's look at it from the personal perspective. You also save 45% in personal income tax by not having to earn that $8,000 yourself. Your family gets a full health benefits paid. This is about as close to a free lunch as tax funding gets. And here's the part that makes it even better. This works even if you're a solo practitioner with no employees. What's great about this plan is it's essentially the same coverage as your traditional group plan. Eligible expenses include dental, vision, physiotherapy, massage therapy, prescription drugs, hearing aids, and a long list of other medical and paramedical costs. What's important to remember is that you pay the eligible expense out of pocket first, and then you submit a receipt to claim the expense on your plan. The plan reimburses you tax-free. Your corporation deducts the expense as a business cost. The only catch is that you can't use the expense that would otherwise be covered for your personal health insurance plan. Some business owners combine this with traditional group insurance for broader coverage. They'll have a basic group plan for things like prescriptions and major medical, and then they'll layer on an HSA for dental and vision for things that the group plan doesn't cover. I think this gives you the best of both worlds. Employer subsidized coverage from the group plan, plus tax-free coverage through your HSA for other expenses. But the real insight is this: if you're not using this, you're literally throwing money away. So let me walk you through a real world example to make it a little more clear. I had a client who was a dentist operating her employee contract out of a practice here in Winnipeg. She was doing well, making good money, she was incorporated, and she had no employees. When I reviewed her tax return and her personal finance, I asked her, "How are you paying for your dental and vision expenses for your family?" She said, "Out of pocket, personal money, my accountant never mentioned anything else." Her annual health and dental expenses were running about $8,000 a year, normal for a family of 4 with kids with braces, glasses, and dental cleanings. So I did the math for her. Her marginal tax rate was roughly 42%. To get the $8,000 that she needed to spend on healthcare benefits, she had to earn about $13,800. She had to pay about $5,800 in tax just to get that $8,000 in her hands. Her corporation deducted this as an expense, saving roughly $3,200 in corporate tax. She and her family submitted the health receipts and received reimbursements tax-free. The impact: her corporation's tax bill was $3,200 lower. Her personal tax bill didn't change because that $8,000 wasn't paid to her as personal income. She had $8,000 in health benefits. The net result was that her family got the full $8,000 in coverage that she needed, and her combined personal and corporate tax bill went down by $3,200. Over 10 years, that's $32,000 in tax savings. And the only thing that changed was where the money was held and how it was dispersed. The health service her family received were exactly the same. And that's what the low-hanging fruit looks like. So if you're an incorporated business owner and you're currently paying for health, dental, and vision expenses personally, you should think about setting up a healthcare spending account. So talk to either your accountant or your insurance broker. Most insurance brokers are set up to administer these. Your accountant can confirm if it makes sense for your situation and ensure proper documentation. The setup usually takes a couple of weeks. And it's important to remember, if you have employees, you might also want to look at having a full group health benefits plan. The tax dynamics are relatively similar, but the administration might be slightly different if you have employees who are receiving these benefits. So if you're an incorporated business owner earning at least $250,000 in annual income, download my Business Owner Playbook. It's a checklist of different levers that you can use as a business owner that helps make sure that you keep more of what you build. As always, if you like these videos, make sure you like. If you have any comments or questions, please leave them in the description. I'll make sure I get back to you. Otherwise, subscribe so more videos just like this wind up in your newsfeed. Until the next one, take care.